Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, January 4, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, the market continues to come down, and they're pretty much at a make it or break it spot. They're a little bit below the make it or break it spot. One more time, let's just analyze it. Let's show you the make it or break it spot. It's basically this low here, which is 467.82, or this low. They're both important. They're close to each other. This one is 467.43. Market closed today, 467.34, below both of them. So the market is teetering on another leg lower, which is where? Well, we talked about it last night, and it remains the same. It's down in the low 464 general area. We've got it demarked as 464.12. That's as a result of this breakup candle low. Sometimes they don't get all the way to the bottom, and other times they come up just underneath by spiking it through. But that place, from at least an intraday perspective, should be garden and variety of chart support at minimum for a short-term situation. Think about it like this. Let's say the market gets below 464 tomorrow. Let's just say that's the case. I believe we might have some kind of phony jobs number or something that can certainly jolt the tape. Fair enough. So let's say they're killing the tape like they killed it into the close today. And let's say they get below 464.12, the breakup candle low. At some point during the day, under normal garden variety markets, doesn't happen every single time, not 100% of the time. The large majority of time, they will fight back to try and close above, or at least intraday get back above 464.12. That's an important spot. Mrs. Market knows about it, and therefore you'll get a bull-bear battle around that spot. Yeah, sure, there are times where they'll just cut through it like a hot knife through butter and not look back for a while. However, that's not the norm, that's the anomaly. What if they do cut through it like a hot knife through butter, and it doesn't even have to be tomorrow, into next week? We've got the next number down. That's not an intraday number. It's the next major number, at least from a daily chart perspective, is around a spike below 459. I've got it depicted as 458.80. It's give or take. A spike below 459 is really the thing. Why is that important? Well, because the market ran up to here, pulled back. We talked about this last night. This is a breakout area. The market was summarily rejected up here on the 24th of July. It pulled all the way back. That's the week beginning the 24th of July. And it pulled all the way back to here. Once it busts through, it creates the breakout area. They're coming back down to potentially, over the next several trading sessions, not necessarily on Friday, to retest a former breakout area. You also have, and we talked about this last night, a weekly chart breakup candle low. There's two reasons why creating a full stack situation, that price area is uber, capital U, important. Getting another perspective, you look at a 4-hour chart, you say, all right, they're coming into a 50 period on the 4-hour chart moving average. Well, what happens if they get below that? Same place, breakup candle low. Can they bounce the tape tomorrow? Can they bounce the tape on the phony jobs number? Absolutely. They bring you to the brink, they get to the cliff, they look over the edge and go back the other way. That's absolutely possible. We have no idea which one will show up in the morning. We just need to be prepared for either scenario. 2-hour chart coming into a 100 period moving average. Speaking of both scenarios, if they are popping it in the morning, guess what? Inside the number members, and certainly live room members, will all have the necessary numbers for resistance on the upside, whether or not we can trade it to the long side, whether or not there's a short, and all that will become clear when you see what happened, and I describe what happened in today's live room and inside the numbers. Same routine. Did anybody make money today? Answer that one with a comment under the video, please. In the 1-hour chart, you have a 200 period moving average, the last moving average in the line of defense, right above that 464.12, that breakup candle low from the daily chart. Guess what? spike the 200 period moving average, get to or in the neighborhood of, or maybe stop at the 200 period moving average on the hourly chart if they're down there. That's an area of interest for more reasons than just one. And that's our story/schematic from a daily chart perspective. Obviously, on the other side, if they're trying to push the tape up, if they're trying to rally it, they're going to try and recapture the 20 period moving average. What happened inside the numbers? Again, did anybody make money today? I'll ask it again. If you didn't post the first time under the video, go ahead and do it now. I'll wait. Right out of the chute at 0 dark 30, we have some important stuff on the board. You can read the notes, pause the video, go back to the chart, and double check the work. But I want you to focus on 469.25, and I want you to focus on 470.35. What have we when we go up? Let's see what we've got. What have we got? 9:15 a.m. before the opening bell. Look at this. 467.45 as a just in case. It will be our line in the sand this morning. 467.45. Let's just get the lay of the land. We think better in pictures. 5-minute chart right of the vertical is today's activity. Guess what? 467.45, they had to hit it into the end of the day. They didn't have to, but they did. You could see they tried to recapture it in the last few minutes of the day, couldn't do it, closed below. That was a line in the sand for today. Another reason why the door is open for lower prices tomorrow. They can certainly have a rescue operation, but the door is open for lower prices. Don't be surprised at either thing in the morning if we have a phony jobs number or whatever. Don't be surprised if you get a big move in either direction. So they were teetering this morning, and then you'll notice here, 469.25 is the bogey for the bulls to get above and stay above in order to stage any kind of rally. That's a signal for traders could possibly be long if they can recapture 469.25. Might have been long for a bounce down here at 467.45 if it got there early in the day, but they didn't do that. Where would be the target? 470.35. Now, the blue line is 469.25. You can see how they tried to capture it. They failed. They tried again. They weren't ready yet. They tried again. They weren't ready yet. Finally got above. Once they got above, what the live traders heard and what was posted on the board was staying above 469.25 will promote at least another buck higher in the SPY, 10 points give or take in the ES, and that doesn't have to be final target. That's just an exit situation. But wait, there's more. Remember, pause them, read them, go back to the chart to double check them. Above 469.25 begins the trip up to 470.35. You'll see that repeated often here. 10:04, those traders wish to be long for a ride up to 470.35 can do so as long as they stay above 469. There's your bogey on the downside. There's your, it's wrong place. That's a stop area. They never came back down there before they went to 470.35 and higher. We take profit along the way, yada, 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 turn them into a risk-free, emotionless trade. There you go. They don't have to stop at 470.35, but they'll generally find resistance up there. Now, there's your 470.35. Now, what traders in the live room heard me say numerous times is, look, they're eating time off the clock underneath 470.35. It's likely not the target. They'll likely go higher because of this. This could have been a short if they did it back here. Because of all this, it took the short or the luster off the short. It took it off the table, and we looked higher to another price. Stay tuned. But wait, there's more. Closing candles above 470.35 opens the door for another leg higher. First to 470.95. More overhead resistance. How about high of day by 1 penny? The high in this candle, guess what? 470.96. High in this candle, 470.96. I had 470.95. Overhead resistance. Did we have traders short the market up there? Yes, we did. Did we have traders flip a trade up there? Yes, we did. What does that mean? It's a twofer. They were long from the ride up. They sold it up here. knowing what was going to happen up here. It was resistance. And guess what? They flipped it and went short based on the fact that it was overhead resistance, and we talked through it in the room. I said down here, if they get up there anytime soon, it is a short opportunity. We also said, in live terms, it was a good place for a morning high. What time did they make a high? Well, this is 11:15. This is 11:25. How you doing? Pause them, read them, go back to the chart, and double check the work. Look what happens as time goes on. Those traders still holding a long trailer from around 469 and a quarter, and they did do a back test, and we did have traders in the live room pick it up down there on a short-term basis. So they can continue holding. Why? Because it doesn't cost you anything to hold it. Above here opens a door for 470.95, and here it is, 11:16. They're likely to put in a morning high sooner than later. 470.95 is a reasonable, give or take, is a reasonable spot for that morning high. Where else? Where else do you get this kind of information? Are you taking advantage of this kind of information? That's only the question you can answer yourself. Pause the video, read the notes, go back to the chart to double check the work. It's all in here. Even when they came down from 470.95, I asked traders in the live room, okay, where's the target? They're learning. They knew exactly where the target was for the scalp portion of the trade. Many of them put it into the penny. We're learning. I said it today. The goal here over the long term is to learn as much so that you don't need me anymore. That's when you'll have total success in the market. That's when you can write your own ticket. What about stocks on the move? We had a couple that hit their entry objectives or were around there. We're going to look at those charts on Mobileye, and Com did not. In fact, we are going to look at Mobileye. Check out the 2702 in Mobileye. That was the number put on the board at 0 dark 30. We're going to look at that chart first. Here's Mobileye getting an exact buzz cut at the opening bell. Getting killed, murdered, all that stuff. They were down 25-30% at the opening bell. How in the world do you pick off a number down 25-30%? It's a falling knife, isn't it? No. Everything's headed to a destination. If you can identify the destination, doesn't matter how much it's down, they're still headed to a destination. But you say, wait, it didn't hit the number. What are you talking about? Really? Well, check out what happened right before the opening bell. This is the candle beginning at 9:10 in the morning. So between 9:05 and 9:10 in the morning, Mobileye hits 2702. The exact low was 26.95, and they were up, what's the high here? $30.94 by 10:15 in the morning. We call that the thieves in the morning. The thieves in the pre-market went to the number and did the deal. Left us traders waiting for the number, standing at the altar. That's the trading business. It happens, but the takeaway is, and you know it, the numbers work. APA getting a haircut at the open below the first number. So what happens? It's off the board, doesn't exist. Second number, missed it by a little bit, bounced, hit it, bounced, gave you a base hit, but they didn't do it in the manner in which. 8 time off the clock and hung around this number all day long. No great shakes, no harm, no foul, no big deal. About NXPI, there's more than meets the eye with this one. So this one, unfortunately, opened slightly below the number. So again, the manner in which the opening print was 204.20. My number was 204.35. Then it ripped higher. Again, the numbers work. It just opened a few pennies below. Again, that's just the trading business. It happens, and I stick to my rules in terms of the manner in which. But wait, there's definitely more. What are we looking at? This is the lazy swing trader. This is the Automagic Algo Pick 'em Out trading system. It basically, just to cut to the chase, shorting stocks when the market was rallying into December, and it was selling longs during the rally that it picked up earlier, and it already started covering the shorts. So we had a short in Apple, covered it today, 4.77%. Twilio, almost 10%. Cat, 4%. These are still open. There's secondary profit targets. These are now risk-free, emotionless trades. On a swing trading basis, these are base hits. We put base hits in our pocket. We let the rest go for the never know. Same concept, same process, different trades, bigger profit. BXP, almost 10%. DraftKings, almost 8%, 7.5%. STZ, 4%. What you notice here is this. Look at this. One long out of all these shorts, and these were the profits that were taken over the last couple of days. The 2nd, 3rd, and 4th of January as the market came down. So you know that it was picking up the shorts on the way up. NXPI, final target, 204.31, 9% on XPI, NXPI. The short was 231.34. Here's a daily chart. There's the short, and there's the final cover. The low today was 204.12. The final cover was at specifically 204.31. And look at that bounce. Closing print today was 207.76. How does it know? Check out the lazy swing trader. There's more where that came from. Shorted the market at the high, covered down here. Doesn't mean that the market might not sell more. Doesn't mean NXPI won't be down more next week. But this was another trade, another profit in the pocket. How can we not take profit here? Isn't this a breakout area? Market ran up to here, collapsed. Ran up to here, couldn't get through right away. Finally got through, came back to do what? Retest the former breakout area. You have to take profit. That was my final profit target. Everything I teach, I practice. I practice what I preach. I teach what I preach. I teach what I practice. Money is where the mouth is. Camp IWM. Still have not filled that gap. Unlikely that gap is the final destination unless you get some kind of rip higher in the morning and this was just a slight correction, fake out operation, shake out, all that stuff. That's unlikely the final destination. It's just the gap, and there's a ton of space in here, down here all the way to this breakup candle low. There are numbers in between, but there's a lot of space. You really have to be fine with your mathematics to find those numbers. Can I find those numbers? Yes. Intraday traders from the live room will have those numbers. Transports, relatively flat today, nothing doing. Could be an on-time type of situation. Of note, puzzle piece maybe on the table. No material change from yesterday. We can move it along over to the Q people. Q people down a couple of bucks today, 0.5%. Firmly underneath the 20-period moving average on the Qs. There's your area. That's a target on the downside and support both at the same time. No material change from yesterday. XLF. While they tried to rally today and failed, they still finished up 0.4%. Again, as long as the financials are not collapsing, this market is not going to unravel like a spool of thread. It's bigger picture, a correction in an uptrend, even if it lasts a couple of weeks. It's not going to go down every day, but even if it lasts 2 or 3 weeks, it's still a correction in the uptrend. Those things happen. That's the way the market works. They create and provide opportunity for those in the know. What about Smashmouth? We'll use that blue line as our benchmark. That was the breakout area. As long as they're below that, it's weak. If they get back above that, that's a recapture. Right here, you have a breakup candle low and a gap. So this area around 163, 162.5, that's a big spot. If they get below that, it's say hello to the 50-period moving average. That simple. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.